Good afternoon, everyone. This is Kim Schmidt, the Executive Editor of Farm Equipment Magazine. Welcome to our latest webinar in conjunction with Iron Comps by TractorZoom. In this webinar, we're going to take a closer look at used combine and the header market trends. Today's presenter is Andy Campbell, Marketing Director for Iron Comps by TractorZoom. He's going to walk through the current harvest category price, volume, and usage trends that have led up to this moment, with a special focus on dealership and auction equipment trends over the last 90 days. Before Andy gets started with the presentation, just a couple of housekeeping items. On your screen, there's a control panel with the Q&A icon. You can submit questions here at any time during the presentation, and we will ask Andy those questions and get them answered for you. And then just a reminder, like always, we're recording today's webinar in the event you want to come back and rewatch it, or have anyone else at your dealership attend as well. All right, we are ready to get started. Thank you again for joining us, everyone, and you can take it away, Andy.
Perfect, Kim, thank you. Thanks for the introduction. Thank you, everybody that's able to join. And for those that registered, they're going to watch it a little bit later. And, I didn't really think about it as much when we wrote the webinar description, but the focus on the last 90 days might even be a little too long. One common theme that you're going to hear throughout this webinar is the recency of data. The market's moving fast, obviously, and at some point it's going to plateau, at some point it's going to turn, and having that recency of data is going to be key. Kind of knowing when that is and not getting your inventory out a little farther than what you can handle. So let's dive in here. Obviously, it is going to cover harvest equipment. So big focus on combines. We're going to look at headers for a little while, row and platform. And then a big thanks to a lot of our dealer partners who have been talking with us lately and talking about the forage harvest market and just the challenges they're having with those self-propelled harvesters. So let's begin because I've got a lot to cover and I want to make sure that we have a chance to get through everything. So really quick, my name is Andy Campbell again. I do a lot of the marketing and market analysis for Iron Comps, which is the tool that's powered by TractorZoom and everything that we have to offer within TractorZoom. If you're not familiar with TractorZoom, I'm going to showcase a little bit of it later to you, but essentially a listing for auction and dealerships now with well over 100,000 plus monthly active users. So we're gathering a lot of data and helping a lot of farmers make better decisions through that platform so they can find the equipment that they need. And let me tell you, they need it now. A little bit of background about myself, heavy in the data analytics. I love spreadsheets and I also farm up in Northern Iowa. And so I can hopefully bring a perspective that includes a little bit of what people are seeing on the farm, as well as an analysis and a breakdown of the data that we see flow through here at TractorZoom. My email is down there at the bottom. Phone, feel free to call if you have any questions, email if you have any questions. But throughout this webinar too, we're going to have plenty of times for you to just submit your questions. I think you've got a little chat or a message feature at the bottom. Kim is going to bring those in, and as frequently as we can, we'll try to answer those on the spot for you. But anyways, with today, really quick, as always, I like to cover where the data is coming from. And if there's any filters, we just want to be as transparent as possible about what we're seeing and where we're getting the information. And then we're going to start high and break it down low. So overall, used equipment market, we're going to take a look real quick at our tractor and combine index. And then I'm going to ask you a question here in the next slide and get your perspective. And then we're going to move on to combines, like I said, headers, forage harvesters, and really, especially with combines, focus on the most recent information that we're seeing. And then right at the end, what can we maybe expect going forward? So we're going to use this opportunity, and Kim, feel free to post the polling question. Kim enlightened me that we've got some fancy technology within this webinar that you can just simply answer the question here. The QR code, which I'll send out after the webinar, it's got a few more questions, but the one I really want to get your perspective on now is, where does everybody on this webinar think that this used combine market is heading? We're going to talk a lot about it, but before I start to sway your decision or your perspective, I'd love to see if you think it's going to go higher, if you think it's going to stay steady, or if you think it's starting to tip and go lower. And so I'll leave this up here for a second. I've got perspective I can see onto the next slide and talk a little bit about the data. So the data we're going to look at for combines is primarily everything that's selling above $50,000 to control for a little bit of quality issues that happen at lower prices. Most of the sales history is coming from 2019, 2020, 21, and so far in 22. like I talked about, a lot of the focus is going to be though on that 21 into 22, what we're seeing. And if there are any hour filters, because I do try to tighten that up certain times, so we're really looking at a similar type of equipment, those will be stated on the analysis in little bubbles. Okay, so Kim, I don't know when or if we can close the polling. And again, not a scientific poll as much as just to get everybody's perspective on where attendees think this market is heading.
Did that pop up for you?
It went away.
Oh,
There we go. Okay, good. So the results are in, and I think you guys can probably see this since it's on my shared screen right now, but we've got about half saying steady, 40% higher, 10% lower. We'll come back to this point, but gathering group data is actually a pretty good way to working the forecasting models. So, okay, I'm going to close this down and we'll keep on proceeding. Perfect. Okay, now I hit on this data quality, so I don't want to repeat that, but the one piece I didn't mention is it is flowing in through TractorZoom, but again, with over $15 billion in valuation data and on TractorZoom itself getting over 100,000 monthly active users, there's a good representative sample that we can pull from. But I said, starting at high level. So we're going to look at market trends first and utilize TractorZoom. This is something that I showed the last webinar that we did in, I believe it was right after the beginning of the year, looking at user search data. And so any dealership that posts on TractorZoom has the ability to access data like this. If you're not yet listing on TractorZoom, just shoot me an email. We can get you up there in just a matter of days. And it's a free service. But this is what we showed last time, that there's actually a bump in searches for combines in October. But I want to show you something a little more recent and a little more aggregated of the shift that we're seeing or that we have seen. And this is a weekly basis, so it's a little less smooth. Your top two blue and green bars there are the proportion of people that are searching for larger tractors. So essentially 175 horsepower in the blue, 300 plus horsepower in the green. And that dominated the market pre-April, really. But then you've got this time period right about there in April where those shrunk, combines grew. Obviously getting into planting season as well. But this time period is significant. We're going to hit on this in a second. Keep that in mind. But this is one of the insights that you can see. Again, it's for free if you're listing on TractorZoom. Our tractor index, again, this is a harvest type of webinar, but I wanted to cover the tractor index because it's obviously an important part of your business, and it's a good representation of the overall used market. With this TractorZoom index, we try to account for a lot of the statistically significant variables, hours, year, make, model combinations that we see within tractors. And we look at a tighter horsepower range of these row crop tractors. Well, what we've been seeing is essentially from 2020 on that we've been growing with this valuation, especially in 2021, starting to rise. The gold is just simply the corn prices mapped alongside of it, just so you can see a correlation. It doesn't play into that overall blue calculation of the tractor index. But, you know, despite what happened today, and I'm going to hit on that in a second, June did see very strong growth within corn cash prices. Now, the blue, the tractor index started to top out really in April. And we see that seasonally, it happens, but it topped out in April and in May. And really in June, it's still holding steady. And that's significant. Again, lower months in terms of sales, but it's not insignificant. And so what this really tells me from a tractor standpoint is it's certainly in a steady pattern and it's worth watching on a very regular basis to see, is it just holding steady for the summer and waiting for strong later July and August sales? Or is this a sign of apprehension on the farmer side? Which certainly could be exacerbated by what happened in the markets today. But that time period right there, that April, does coincide with what we just saw on the search volume change. Probably happened about a couple weeks later on tractorzoom.com. We saw the interest in tractors drop. and it shifted over to combines. So my next question is, does the combine index follow the same pattern? If they're shifting their interest over to combines and combines continue to grow, that reinforces that what we're seeing on Tractor Zoom search is actually indicative of the market. But if combines really start to fall, then maybe it's noise. So let's take a look at combines here. Combines, again, in March, really topped out. We had a super strong auction sales season in the spring, really starting in January, February, into March. April slowed a little. May certainly slowed a ton. There weren't a lot of quality sales in May, but you almost can ignore May just because the volume is so low. And especially this year, the volume is incredibly low that you really statistically can't put much weight on it. And when you look historically in the index, we see slow Mays. That always happens. Okay. So I was paying a lot of attention to June. What is going to happen to the combine index in June? And if it held steady or if it dropped a little bit, that was certainly going to be a show of concern. And that's not the case. Really responded great strong, I should say, in June. Strong prices that we saw close to what we were seeing in a very strong January. And so very similar to the springtime. So at least from a June perspective, the combine market looks like it's continuing to rally. So for those people that said it's going to continue to go strong, June supports what you're seeing. But recency is key. And so I would even say in this type of dynamic market that we need to have even more recent data than what is today, halfway through June almost, than 15 days ago. We need to know what's happening yesterday. And we'll hit on that in a second. Okay, before we get into combine specific information though, there are obviously other things that move the market that make this market move. Today's WASDE report was, it was a little bearish maybe, but I think that might've been built into the market already. Crude oil prices, at least last time I checked, had dropped $8 a barrel. The Q2 earnings season is coming out. So for the market managers, if those earning reports are weak, then it could show signs of the economy slowing down, which could further pull money out of commodities, hurt the market. The CPI index for June is going to be released, I think, on Wednesday. If it stays at 8.6, which it was, or above, shows signs of inflation, then the markets could take an additional hit. So there's a lot of things that could happen negatively to this market. International markets with Ukraine obviously is always in play right now. And Russia and Turkey, I believe, are in talks of maybe opening a corridor. We'll see if that happens. And then China and COVID, if they have another lockdown, that could further have implications on the supply chain. And so there's a lot going on internationally that could affect it. And then finally, with weather, that's going to obviously affect our commodity markets as well with this potential heat dome that we're going to experience or are supposed to. But all in all, there's a little bit of downward pressure, certainly on the grain market. And that's showing today. This snapshot was for earlier this morning, and I wish I would have sold earlier this morning. No bueno. Okay, but let's get into combine trends, why some people are here. So with combine trends, I want to hit on, again, higher level and then go down to the more aggregate data. Again, everything that you're seeing here, I have filtered for being above $50,000 in auction sales. So let's take a little bit of a look at what's happening. And if you look, this is down by month, there were significant sales. The bar graph is the average value of combines that were sold. And then the line graph is the average hours of those combines sold. I always like to compare those side by side. It helps explain some anomalies. Just for instance, 21 in May, price looks like it took it in shorts, but it's, whatever few combines were sold in May had really high SEP hours. And so that explains a little bit of that dip. But here in June, because we care about recency, the price was just as high as March, a little higher than March, with a higher SEP hour value. So I would say, June compared to March is even higher. Not quite the price that it was in February, with a slightly higher SEP hour. So, if you're comparing comps, a February to June would be a very similar type of market that you could compare into, and maybe even into January. But much like the index that I showed earlier, that's out a little bit, that June is just as strong as the early part of 2022. Let's move on though. So June sales are strong, but I wanted to break this down even more aggregate and look at categories or maybe washout classes if you're looking at that from a dealership perspective. So I just simply split this up by every 1,000 SEP hours. Again, auction data here. June, strong prices for, like I said, comparable to March, very strong. Move on down to 1,000 to 2,000 SEP hours. We had, on average, high SEP hours and just as strong of prices. And this is probably the most significant category that really performed well with high prices in June.
Hey, Andy, we got a question come in for you.
Yeah.
The question was, what are the acronyms from the earlier slides? What does your TZ scale stand for?
So the TZ, and I almost throw that out just, off the cuff. TZ is Tractor Zoom. And so the data is pulled in through Tractor Zoom. And if I'm interpreting that question correctly, then yeah, if you see TZ, I'm just simply talking about Tractor Zoom because it gets to be a mouthful. And if I ever say IC or you see IC, I'm talking about iron comps. But yes, if I answered that one correctly, TZ index is Tractor Zoom. And if it says RC TZ index, again, it's to be a mouthful. I'm just simply breaking down the row crop tractor index with Tractor Zoom data. So good question. And yeah, I throw that out so much now that I forget that it's an acronym. Oh, and
I have one more follow-up on that. Sorry.
That. So specifically, what is a scale? And that's good. I actually, without going too much in depth on it, but I did write a blog post on this, so it answers a little bit of the questions. So with an index, the baseline is 100. And so we built that off of what we expected for prices based on 2017 to 2020 data of row crop tractors and then combines separately and kind of baseline what we'd expect for prices. Found out all the variables that were significant through a linear regression analysis. And for anything that was statistically significant, certainly hours, year, which pulls into age, the make, model, type of auction that it was sold at, those are all things that were statistically significant. So we took those into account and try to normalize the data, taking all the variation out of it. But it doesn't take into account the variation in the market. So if it goes up, then it indicates that something else is at play, not the hours, not the variation in horsepower that was sold, something else. And so the market tries to capture that something else that's moving the market, not just a variation of great tractors were sold this month with low hours. So I hope that kind of helps answer it. And in the follow-up, if I can remember, I'll send a link to that blog post. But 100 is baseline based on 2017 to 2020 through 2020 tractor data. Good question though. Okay, anyways, so talking about the ranges here, 2 to 3 on the SEP hours. Again, extremely high on the average SEP hours and just as high on the prices. And so just goes to show for a lot of the different washout cycles that your dealership might have, these used prices continue to be strong through June and maybe largely driven by the lack of supply. So this looks at combines with less than 2,500 SEP hours. And each quarter, because I know you're going to have great seasonality when you're selling combines at auction, I compared it with the previous year's quarter. And with a little bit of variation in Q1 and Q2 this year, in general, we're down about 30% every single quarter from the year prior. And so I don't see a lot that would likely change going into the important selling season that is Q3, really late July and August. I'd be surprised if it was, if the supply was greater than it was last year. I don't think it will be. Could maybe be, at least 20% down. And again, remember last Q3 was a down year. So I'd be even surprised if it matched those numbers that we saw last year. And this is one last thing that in the general combine analysis. Oh, where is the supply? We get this question from quite a few people. Obviously, it's not rolling off the lot as fast as maybe what the OEMs want it to be, capitalize on the profit that could be out there, but supply chip concerns and other supply chain concerns. a lot of farms are dueling up on combines. And we did this analysis in later 2021, but it looked at retirement and estate auctions. And of the retirement and estate auctions, on average, if they sold a combine, how many combines were they selling? 2018, barely over one. 2019, again, it's a scale. You're only going from 1 to 1.25, but you're moving up to 2021, where on average, these retirement and estate auctions, hopefully trying to gather a farm at its completion, were 1.25 combines. And so we really should let 2022 pass, so we have a full year of that seasonal data to compare. But through 2021, more farms were having dual combines. And again, this does make sense. Us from our farm standpoint, we're concerned about supply. If our combine breaks, we don't have dual combines. Are we going to be able to get the parts in time to complete the harvest? It's important now, especially since commodities are worth what they are. So again, just a kind of a nugget to think about if you're out there working with farmers and asking where that supply is. Okay, now I did have a few people, Casey, Kurt, Kevin, you partners reached out to us knowing about the webinar and asked us about some specific make models. And so I tried to dive into just a few specific ones, and also wanted to look at the brands to see, is there something that's happened into Deere that's not happened to Case or New Holland? I picked these three out. So Case, New Holland, and Deere, I'm going to show you. I color coordinated this next slide. So kind of get an idea of where these graphs are at. This is something I showed you earlier. It's just average price with the SEP hours that we've seen for all different brands, everything less than 2,500 SEP hours. And with the exception of a couple anomalies where a really strong Case sold there and a strong John Deere who sold in June, they're moving together. And so this is not an issue that's just affecting one color and not the other. The movements in prices, the movements in volumes are, for the most part, across the board. And then here's the recent combine comps. So this is where, when I told you about recency, this is where it's really key, especially now that volume is so low. You can't simply take a month's worth of data and analyze it because it's 30 days past, because it's 60 days past. That hurts you. And also, you're not getting a lot of N. Your statistical number is so low because the volume is low. It's harder to base averages off that. And so we're really using iron comps and tractor zoom here a little bit. And I'll show you how to say, how is an individual combine that could maybe be the canary in the coal mine, how is that performing? And so I picked out three, a Deere, Case, and a Challenger to try to narrow this down. They're relatively recent. This one, if I'm reading on here right, sold July 6th, I believe it was. We have price prediction within Tractor Zoom. And so if you're on Tractor Zoom, go over there and search down for price prediction. I'll show you how you can do that here in a second. And you can see through the algorithm there of what we'd estimate the price to be. If it ends up being higher than that, or higher than even what people vote, because you can sit here and people can vote on what they think it'll be through crowdsourcing, it can tell you a lot on the direction of the market. So this one, S680, sold just days ago, predicted it to be 71,000. And, just to give you an idea on the S680, values are rising through Q2, on average 170. This is up 25% than a year ago, and even up 15% from this 145 to 170, then just in Q4. And December usually brings pretty high values. So again, just up 15% in 6 months for very comparable average hours. That's significant. Will it hold that pace? And so that's what I wanted to test out here.
I have another question for you.
Yeah, and I'm seeing it now.
Great. I'll read it for everyone at home.
Okay.
Has Tractor Zoom Iron Comps collected or segregated combine valuation data for units equipped with automated leveling systems installed on the separator body of the combine?
Good question. And so one of the things that we've done within Iron Comps, and Scott asked this question. Scott, I'm writing this one down so I can hopefully remember to pull this back up. I want to pull into Iron Comps. And our engineering team, with the description, auctioneer's description, and the dealer listing description, made it searchable. And so what I've done is, because that's searchable and because there's umpteen number of qualitative pieces of data in there, that I'll pull it into Excel. You can, within a click of a button, export it as a CSV. And then I'll write a little bit of Excel code saying, does this contain, something like automated leveling systems, or any acronym that might be involved with that. I can throw in as many as I want. And then I'll pull it out as, yes, it does contain that, or yes, or no, it doesn't. So right now we don't have a bucket specifically for automated leveling systems, but we've had a lot of dealers ask us, I'm curious about this option that might be in the description. And I've done analysis that way, both on combines and I did one on balers not long ago, where I'm specifically looking at one aspect, and that's what I do. So I hope that answers your question. No, it's not built within the platform, but because our description is searchable and because it's there within the data, that's how I do my analysis on very specific instances like that. But yeah, good question. And hopefully I don't forget this one. I'm gonna try to write down my notes as quick as I can. Automated leveling system. But I'll show you how that can be done. Okay, so let's take a quick look at this S680. Two recent comps. The first at 120. This was back in December. If you adjust that a little bit for hours, it might bring the value down to 95, maybe a little bit lower, into 90,000. Compared with R that we're looking at is 2450 for SEP hours. The second comp here, a little more recent. And again, not a lot of comps out there if you've been paying attention, just because there's not a lot of sales. It's got less SEP hours on it, but if you even adjust for that, maybe about 30,000 if they use about $50 per SEP hour. So I would expect this to hit, somewhere in the 70s if the market is okay. If it hits above this 71, if it hits above 80, I would say the market is strong. If it's below 70, I'd pay more attention to the market. Like I said, this auction happened just last week, sold for 83.10. And so again, didn't crush my estimate. It did beat the price prediction, which puts a little more weight on historic. So that suggests at least a strong, or at least a holding pattern in the market, if not even stronger. Looking at a Challenger 670, and it doesn't get a lot more recent than this. This one sold less than 24 hours ago. And a good option of a combine that's not green came through at 883 SEP hours. So I pulled up comps at for the 670, and you've got, again, one here sitting in the middle that has a lot less SEP hours on it, but it's probably the closest comparable type of machine. Got one here with a few more SEP hours, quite a few more SEP hours, and then you've got a decent distance. This first one I threw in there just to really show how much the market has changed. This is back in August of 2020 with 400 SEP hours. This one in about a year later, almost doubled in price for the same amount of SEP hours. So again, nothing that you guys haven't experienced out there, but to showcase how much that market has really moved. This combine sold yesterday for $57,500. I don't think it's a coincidence that it landed on the exact value of that comp. I think the secondary bidder knew that comparable, or at least had to be doing his homework and paying attention. And at any rate, it certainly, again, justifies a strong market. The fact that 800 SEP hours sold for the same price as something did at 470, within a year. And again, keep in mind, the combine market was not weak last July. It wasn't as strong as it is now, but it's certainly stronger right now than it was last year. Okay, and then this last one, I'm going to hit on this one briefly so I can keep up with time. A Case 8230, this also sold on July 6th, or went up for auction on July 6th, I should say. I did a lot of analysis for this one pre-game, and really the end game is that there was no sale. And so looking at these comps, very similar here, comparables sold in December, right shy of $100,000, and then a little bit of a spread and the most recent comps sold this spring. This one up here might be the best machine-wise comparable. This one over here on the right might be a little bit better in terms of the overall hours that we're looking at. It doesn't have duals on there, but regardless, there was a reserve on it and it didn't sell. And so I don't know what the reserve was, but this person probably was looking at certain comps and thought he should have gotten a better price for this combine. So sometimes you can gather a little bit of information on what doesn't sell as much as what you can and what does. But to rehash the combine market before I get to headers, the supply though, down roughly about 30% year over year. And we're seeing that from quarter to quarter. You know, next quarter will be the big one to pay attention to because we also saw low Q3 numbers last year. And so I'll be interested to see if it continues at a decline of supply year over year from this point forward. But overall values just as strong as the spring values. And really, I'm not seeing any sign of significant weakness going on. But it will have a headwind based on those market trends we saw earlier. Now, getting into the row market header, and I'll go through this a little bit faster. I know these aren't as valuable on your balance sheets, but they're obviously significant. And Kim, I saw another question pop up. So maybe someone said, didn't miss a price on the 8230. You did, and so did I. It was a no sale, and so they did not sell at auction. And I don't know what the reserve price was, and I don't know what the auction got up to. If I can dig into it and figure out what the auction values were before the sale, I'll try to do that, but I don't. I'm not positive I can do that. I'll look into it though. But yeah, we all missed the price on that one. Okay, real quick. Row header market. 2019, this is a little smaller, so I'm just going to read off, but I normalize this a little bit with the average number of rows, so I can kind of see how valuable the machines on average were that were at auction. And as we move to 2019 to 2020, the average price continues to rise. The average number of rows on the row headers drops just a little bit, but it's the 20 to 21 that both of them rise. The quality, the size of the headers at market increase, and the prices do significantly. And again, you would expect those two to be correlated. So the rise together is not a surprise. I'd be surprised if they diverge, which then gets me to what we're seeing so far in 2022. Again, supply is a little bit low. The header market really is, the spring is just a warm up for what's going to come here in July and August. But still, this type of divergence where the price holds steady, even though the average size of headers is decreasing, that is a sign of a really strong market. And so, again, this will be interesting to continue to watch. And I diced into this a little bit further to see what was driving this row crop strength. And it is driven the most by 8-row heads. There's a lot of volume at auction of 8-row heads that are out there. They're obviously not as expensive as the larger heads, but they're just the volume of them out there really bring up that average. And it had the greatest price increase from 21 so far into 2022 for in general at all 8-row heads. A couple of our dealers did ask me specifically about certain models. And so I wanted to bring up this graph that shows these different models, and I'll read them off in case the legend up in the upper left doesn't show that well for you. But the light blue on the bottom are 612Cs. The dark blue in the middle is a 612 FC. Purple is a 712C. And then the orange on top is a 712 FC. And really with your top three, your 712C and your 2 FCs, you're seeing the price increase together. Though, this header market is really moving together, with the exception of the 612C right at the bottom. But again, that shows that nothing is immune to age. And so the 612C, it's an older model, and obviously you're going to lose value as those things age. I've done some regression analysis on headers specifically, and it's about 30% of the variation price that I found is just totally dependent on the age. It's obviously one of the easiest predictors to know how old is it, how much has it been used. And that's what's happening to the bottom 6112C. Again, I should note that up at the top, this is just Q1 and Q2 data. I didn't want to throw in Q3 data because it makes 2022 not comparable to the previous years because it hasn't experienced an August yet. But those are the percent increases year over year that we're seeing for those header models. Okay, but moving on to platform supply. It is lower, and this is maybe where I saw some of the biggest question marks that I honestly don't have a great answer for. But I'm looking at platform headers that are less than 10 years that were sold in Q1 and Q2. And really, obviously your supply is down, but it's not equally across the board. And in fact, the larger header models, the 45 footers, they're up. And again, I don't know if it's noise because we're dealing with such a small quantity, but they're up. The 40-foot headers are down significantly. 35 foot down a little bit, and then 30 foot are really just down slightly. And so on this one, feel free to shoot me an email. I'm not entirely sure on why the 45s are in growth mode at auction, and the other ones are hit significantly. But that's in general what I'm seeing. One other thing that I've done that's not necessarily on this graph, but I wanted to compare Q1, Q2, 3, and 4 for sales volume and what can you maybe expect here in the next few months in terms of supply. I saw this as a pretty repetitive pattern from 2019, 2020, 2021, that roughly Q1 and Q2 supply are typically about equal, give or take some number of headers. But what you saw in Q1 at auction will typically be what you see at Q2. Q3 is almost always the equivalent of Q1 plus Q2. It's double what you'll see in any one of those quarters. And then Q4 almost always was right around 1.5 times of what you'd see in Q1 or Q2. So again, just a rough rule of thumb that what I've seen show at auction in case you're wondering what this year's Q3 or Q4 might look like for auction supply. Now, row crop headers for that instance, that was on platforms, roughly about the same, maybe with a few more selling in Q4. Platform head values by size. So again, looking at the average price increase that we've seen year over year for platform headers, again, just Q1 and Q2 data, a rise across the board, except for those 35 footers. Again, I don't have a great answer of why that's potentially happening, but just an average value change from 21 to 22, good growth across most of them, about 10 to 15% growth for those larger headers. And then finally, to put a cap on the headers, 40-foot auction volume down the most, but in general, the 40 and the 45 header values for platform headers up about 10 to 15%. And then row header values acting a lot like combines. June was strong. We saw a lot of similarity to the spring values. Again, like combines. July might show some signs of slowing, but it's early. And, I think we need to see more July sales before we can kind of get an idea of what August is going to look like. While I hit on that message, I should put a quick plug in that we're going to do another analysis and share it on the Moving Iron podcast later this month. I think I'm meeting with Casey Seymour on the 27th. And so we'll give some of the same analysis, but with a lot more recent data that we've seen through July. So, call it, podcast 2.0 or what you will. But we'll have some more recent data later in July. And then finally, the forage harvester market. I feel for a lot of the dealers that are working through this. And to be honest, I don't have a great answer for you. I wish I did, but I can at least show you the data that I'm seeing and a little bit of what you probably already know is an issue that's out there. The forage harvester average values have been dropping. This shows harvesters with machine hours from 500 to 4,000 hours on the decline ever since about 2019, Q4 in 2019. And it's just this, this straight line decline. I've moved that hour filter around and it really keeps the same shape. almost independent of what kind of machine hours you put on this. It's just the average values that you're getting at auction are less, a 22% drop last year from 19 to 20, and then about a 22% drop from the end of 2020 to current. If there is any kind of bright spot, it's really in these first 2 quarters. From a lot of the different hour categories, it does look like the auction values are strengthening a little bit. Again, I don't know quite enough about the forage markets to say this is why it's happening, but I can tell you Q1 and Q2 values are higher than a lot of what we've seen in 2021, if that's any consolation. But you really can't blame the farmer for what they're seeing out there. This is the price gap. When we look at TractorZoom bringing in auction data plus dealership data, it gives us the ability to really see the difference between dealerships and auctions. And this, I had to tighten the hour filter a little bit so I could get a little more reliable data. But your lime green up at the top are quarterly average dealer list prices, and your blue bars at the bottom are your average auction prices. And this may be, whether it's a reason or whether it's just simply a symptom of what's going on, there's a huge gap within this market. In Q2 of 2022 that we just wrapped up, almost a 3x gap between a like machine at a dealership and one sold that's at auction. Now, granted, dealerships certainly offer a ton of value that you're not getting at auction. Quality machines likely better. You got service, you got parts, you got so much more. But a 3x pill is going to be pretty hard to swallow for a lot of farmers. And so, if you're having trouble moving things off the lot, that might be one of the reasons. Plus, the volume going at auction isn't phenomenal anyway, and so it's kind of hitting double. And so one thing that we've done, and I might take a break and cut over to Iron Comps to show this. A lot of people might ask, where can I get this type of data? If you're in Iron Comps, what I do a lot of times, and I'm going to flip over to Iron Comps here really quick. We are there. So this is TractorZoom. Let me pull up and open Iron Comps. If you're familiar with Iron Comps, and I know there's a lot of dealerships who are partners, a lot of farm credits, USDA folks that are on here that are familiar with this. If you're not, I'm just going to walk you through this real quick. But I pull up equipment lists with things in particular. I've got farms that I follow, this particular webinar as equipment lists. And so I can save values in here and quickly go in there to see what the auction averages of pieces of equipment that I'm concerned with, what the dealer averages are. And then again, I've entered these relatively recently. If I've entered these, more historically a while ago, then I get to see how much the market has moved since I put my values in there. It's a great way to check to see if this market is on the move. And so one common harvester that I see a lot of is this Kloss Jaguar 980. And I can go in there for a 980 and see comparables that are based on the most relevant. And Iron Comps can pick these for you, but you can also go in there and say, well, I don't know the hours outright, so I don't consider that to be my considered set. But you might say this one is, and it quickly adds it in there. But like I mentioned earlier, and this can get to a couple of people's questions that they had on analysis, you can go and download a lot of this information as well. Now, I keep this within equipment lists. You can go also. That's my typing speeds here. So I can look within auction averages and see how many of those I want to add in. And this is to find comparables. I can go into looking just at dealer lists and which ones of those I might want to consider. This is for data analysis. But a lot of what I do is I also can export this information. And Scott, this is probably a good time to re-hit on your question about the automatic leveling system. If these were for combines or if there's anything particular in these descriptions, forage is certainly not my bag, but whether it's this moisture sensor, cutter head, this particular type of processor that you're interested in. If you do this export, instantly pops it out into a CSV, and now you can search and you can do that kind of analysis at the granular level. So just wanted to show that really quick. I'm going to pop back over to the PowerPoint. But that, again, I mentioned earlier that recency is going to be key as we look at this market and if and when it's going to tip. That is one way that you can go in there and pull the data that you want to see if the market is really moving for any particular comparables. One thing that I've done within this, and I know we have a question coming up, so I'm going to flip this next slide and then answer it after this thought, is I pulled up 9800, just like I showed you there for the CLOS, though. And then I exported the data, just subtracted the manufactured year by the sale date year, and Excel, it pops out a nifty little graph that said, okay, what are the average list prices of the different years? This took about 2 minutes after that export. And now I've got something, and I could sort it by something in the description any way that I wanted to dice it. And so one thing, though, getting back to the foragers, I can really start to see on how much that forager loses when it drives off the lot. And that price decline is significant in terms of percentages. And then it really starts to level out a little bit once it's been used. So a couple questions, though. So Kim, on the 98, okay.
Yes, sorry.
So,
the question was, what are your predictions to values once the supply chain normalizes over the next few quarters?
okay, good. And I know I've got another one in the chat section. Compare a 9800 CLOS to a 980. And I'm going to answer the second one, or Kim, I'll answer yours first. And then if I don't get to the 9800 CLOS, I'm going to answer that offline, and then I'll send that back out as kind of a post-show notes. But from Alan, if I don't get to it today, because I know we're running a little tight on time, I promise I will get to it and send it out. But Kim, to your question, would you mind repeating that, or what?
Yes, I will say that again. Sorry, I hadn't noticed the chat one. So the question was, what's your prediction to values once the supply chain normalizes over the next few quarters?
Okay, so I'll first throw out the disclaimer that this is based on what I've seen, and obviously I can't see values that haven't come in yet. The biggest thing I would notice on the question is if the supply chain normalizes. I talked with a fair amount of OEMs who are particular, or they want to know in particular about if they have to send chips to one machine versus another. And so I'm not positive that the supply chain will normalize. But even if it does, how will values react? And what I've seen a lot from regression analysis and just following the markets and the machines, that a lot of it is based on attitudes. Farmer attitude, obviously, in particular, and what they're willing to pay. And while tractor values do correlate to corn, I did an analysis on combines, and I broke this down specifically to a certain subset of combines, and it trended together, but it wasn't super strong significantly. And so I think that the movement and the general excitement that a lot of farmers will get over the markets has a lot more to do with their willingness to pay and willingness essentially to take on debt and make those big financial decisions than the exact break-even point of corn and what they're going to realize. And so I would say a lot of it is going to be based on the mood of farmers. And I think there's going to be demand in the markets for a while. So I think it's going to be okay, but I don't think it's going to be as hot as it was. Even if we stay strong at these, $7 corn levels, $6 maybe in the new crop, I think that's going to be a bit of a disappointment after we saw $8 with the recency. And so I would be surprised if we continue to see strong combine values all the way through harvest. But again, the one factor that, again, this is definitely me and a little bit of hyperbole, but you could have world food shortages, which then just throw commodity markets into a skyrocket. And that would spur some things along a little bit too. So anyways, I hope that kind of answered a little bit, but it is certainly a little bit of projection. And the best that I can really tell you is watch the individual sales as close as possible, which then, is not a bad segue into what's coming up next. So to wrap up the forage before we get into what comes up next is the value gap is just immense between what's sold at dealerships and what's sold at auctions. If for whatever reason, it's there. And so while that value gap is that big, it's going to be hard to move a lot of those dealership forages. And like I said early on, though, I don't necessarily have a solution for it as much as I have just the data that explains the current scenario. And again, this is not a closing slide because I have one more thing that'll hit on that last question. But to recap what we've talked about so far, the used tractor market this summer looks like it's taken a bit of a breather. Not down, not up, but a little steady. Combines, though, not the case. Supply continues to be down. They were late to the party on the value increase. If you remember, tractors really took off before combines did. They looked like they're going to close the place down. They're sticking around with those rising rates a little bit later. The headers, not quite as strong as the combine market. The row crop headers are closer to what the combine market is doing, but they're still up 10 to 15% year over year for sure. Obviously, variation for the make, model, and the size of header is there. Again, look at the most recent comps, the most comparable comps on your header. And then the forage market miss, it's really Econ 101, the supply and demand curve. I shouldn't use the crossing curve because I don't think these things are really crossing. That it's just a miss in terms of what farmers are willing to pay in that forage market and what the current prices are that are out there. So Magic 8 Ball, getting to the last question, what does lie ahead? So the one thing that I, want to talk on is the recency of data that obviously, anybody can spitball and say, here's what I think is going to happen. And I know a lot of dealers have to do this because you're working on trade-in values on early order periods or whenever anybody's coming in to trade in a piece of machine. You've got generalities that the world is in a tight market for food supply, regardless of what happened in the markets today, that I think we're at least the fourth tightest carryover supply in grains that we've ever seen before. And so, as bad as the market is today, we're still a very tight market, and food will continue to be a big global concern going forward. So that's good support for the overall market and then the equipment market by proxy. But pay attention to these three. We've got a Case IH 8250, New Holland CR 9060, and then a John Deere 9770 STS. Those three are coming up for auction here later in July. I pinpointed those. You can find them on TractorZoom, and I'm going to actually cut over to those in a second because this is probably the best thing you can do is on a week-by-week basis, go pick any particular sales of a market leader. S series, there's a lot of data out there, 9770 STS, a fair amount of data. I'm going to pull out that New Holland though, and say, okay, if this is something that you want to watch, and I know not everybody has a luxury that I sometimes do. I get to dive into this data every single day, and lucky enough to do so, and surrounded by Iron Comps and TractorZoom data. But even if you're not fully within Iron Comps yet, you can go in, and I think I've already got this pulled up. Just need to make sure. There you go. You can go to TractorZoom.com, type in this CR 9060 from New Holland, and figure out, okay, what would you pay for this? Find some comps on it. If you're on Iron Comps, you can go in there right into here, type it in, and say, okay, and you can write this one down. I'll throw this one pro bono to you. The auction average right about 50. I've looked a little bit closer, and the 43 is probably closer to a custom average based on 2 recent sales. Dealer, though, certainly a lot higher than that, just over 100. And even go into the dealership data, and this is really filtered down to just contain a few SEP hours. So 1,300 to 1,500, extremely tight SEP hours, range, I should say. And you're sitting here, $100,000 is a very comparable dealer list. And you got, again, in that data set, you've got right around 50. Let's go back over here, go to Tractors and go to this one and favorite it. So I'm already signed in here. If you're not registered on Tractors, it's free. Just do it in a second. Just put in your email, but you can favorite and it'll tell you when it's coming up for auction, and when it sells, you'll get a notification on it. And so that way you'll be able to stay on the market almost passively. And so it'll tell you what it sold for. And then what I do is I check, was it what I expected? Was it above what I expected or below what I expected? And that gives me a quick reminder and a check on the market. So then I can act appropriately. And one of the follow-up questions I'll send in the survey afterwards is how often do you act on this data? Are you adjusting prices on a daily basis? Obviously that's prohibitive for a lot of people. Weekly, monthly. But with the dynamic market like this, the more often, obviously, the better financial position you'll be in, whether you're protecting from risk or opportunity or collecting on opportunities. One thing I also wanted to show you was, let's go take a look at all equipments on Tractor Zoom. And let's start at the beginning. Let's go looking at harvest equipment. And then one that I know, or at least I think is not out, that Kevin was asking me about certain cases. I'm not going to screw this one up. Go 8250. Yeah, let's go take a look at 8250. Say I'm concerned with an 8250 and I want to see what they're going to sell for at auction. So I've got a few 8250s here at dealerships that I can do comps on, but let's go to auction. There's no current 8250s that are coming up for auction. Not a big surprise because supply is low. Here's one of the other great things you can do, whether you're looking for auctions and actually want to buy, but I'm going to save this search. Just confirm it. So it's saving this search. It'll alert me whenever any one of these comes up for sale. So then I can be one of the first to know, hey, one is coming up for auction. And now I can base my comp off of that price. And so again, that's one quick way that you can stay on top of the market. Again, using Tractor Zoom, you can do this for free. I also build out a ton of equipment lists within Iron Comps, just all right here, whether it's for this webinar or any of the other farms I follow. And then, like I mentioned, I can watch the auction value versus dealer value change versus my value. And that's also other ways that I can always stay on top of the market on a daily basis, really passively. So anyways, I digress a little bit. I want to get back to just thanking people because I know we're coming up to the top of the hour. So I couldn't fit everybody on the screen. I just really pulled this from the last webinar that we had, but a lot of this data is just thanks to the great dealers that we get to work with, a lot of the great auctioneers that we get to work with, and really thanks to a lot of our partners that ask us these fantastic questions. I wouldn't have come up with this webinar if it hadn't been for conversations that we're having on a very frequent basis with a lot of our great partners out there. So you've got some stellar thought leadership out in the field that we get to draw from. So very appreciative of that. I have a couple follow-up questions that, like the Kloss 9800 and a few others that I'm going to get to. Sorry I didn't have time on the webinar today, but I will get to them, and I'll probably do an overblown analysis, one that I probably shouldn't spend so much time on, but I will, and I'll send that out. So we've got a minute left. If there are any questions, feel free, you can ask them now, but I'm going to leave my email up there if anybody on your just wants to shoot me a personal question. And love working with dealers, partners, or anybody interested in Iron Comps and Tractor Zoom. It's just fantastic set of data, good, high quality, transparent data that are helping people make better decisions. So anything I can do to help, definitely will do that.
All right. Thank you, Andy. That was great. So far, no questions have come through. So I think we will wrap things up. Just a reminder that the webinar was recorded and the presentation will be available on the Farm Equipment website in case you want to go back and review it. Keep an eye on your email in the Farm Equipment newsletter for more information on when we've got that up. And then on behalf of Andy and the Tractor Zoom and Iron Comps teams, as well as our entire staff here at Farm Equipment, thanks for joining us for today's webinar. If there's any topics you'd like to see us cover in webinars in the future, please feel free to reach out to me and let me know. And then thanks again, everyone. And thank you, Andy, and enjoy the rest of your day.
Thank you, everybody. Thank you, Kim.
Thank you.